time. It pulled back a little bit, but we'll probably see it hit 100 again in the next 24 or 36 hours. It matters because it's psychological enough to possibly change the way people act in terms of their consumption of oil. The consumption growth is in India and China and parts of the world in the East, and it's affecting people in the West. So we're going to have to figure out a way to make this work, because the way the economies in the West go, we can't really sustain a continued increase in the price of oil and gasoline.
I mean, there are a number of factors at the moment which is just fraying the edges of consumer confidence, particularly in the United States. Is this, as you talk about psychological factors, something that's likely to further weigh on people's minds?
Sure. I mean, if you look at 2007 in the United States, there are two major things. House prices were lower and energy prices were higher. We're hoping that 2008 sees the bottom of the housing crisis in the United States. But this oil prices, I mean, when you talk to economists and you talk to people who follow oil, Hugh, nobody thinks oil should be at around $100 a barrel. Long-term expectations are more in the $60 range. But the bottom line is the market dictates what you pay. So if you're going to go into the new year paying $100 a barrel, or what seems low to the rest of the world, but $3 a gallon for gasoline, that is going to make people make different decisions. And at a time when we're thinking that there might be a recession coming in the United States, starting the year off, starting the first trading day of the year with $100 oil, that's not helpful for confidence.
So what is it doing already in terms of investor choices, in terms of opportunities and potential dangers for people trying to invest money?
Well, you know, the investor who hasn't invested in oil companies is now wondering whether it's too late to get in on this game. Oil companies around the world don't need oil at $100 a barrel, by the way, to be making a great deal of money. There's a great deal of movement in non-oil alternative energy companies, so that's helping. This high price of oil is really spurring alternative energy sources. But there's definitely a sense in the West that there's going to have to be alternatives to fueling cars with straight gasoline made from oil. So there are opportunities in that market for people who've invested in traditional oil companies like ExxonMobil. They've more than doubled their money twice in the last 10 years.
So briefly, you touched on the issue of where the long-term oil price might be. Is this going to be a situation where people will look back in a couple of years and say, $100, what's the fuss? We're used to it now. Or is there a prospect that it might go back down again to figures more like those we saw 5 years ago?
Really, the smartest people I talk to on this say that these levels are not sustainable. It should be much lower than it is. But the bottom line, Hugh, is this is where it is. Everybody tells me it's not supposed to be, but $100 a barrel is what they're paying for it right now. We don't tend to see